Dan Deming of KKM Financial joins us now for a closer look at the trading action. And Dan, a big run is happening here again.
Another continuation, yeah. Last week, impressive run early in the week, and then we saw the market able to hang on to those gains at the end of the week. So we'll see how this week plays out. We do have some big announcements this week, so the market could be definitely waiting to see what those announcements are, and we'll get to that in a second.
You know, even the London attack.
I know, yeah.
Did not move the market.
Missile launched as well, another one. Yeah, it is amazing, Angie. I guess the market does have a tendency to get conditioned to some of these events, and historically, political events do not have a long-term impact on the market unless it leads to an economic impact or perceived economic impact. And I guess right now we're seeing the market desensitized to some degree to some of these events because they are happening a little more often, unfortunately, and to this point there hasn't been an economic impact.
Enter the Fed. This week we do have an FOMC meeting coming up, gets underway tomorrow. I think the anticipation here is what? That the Fed is becoming more likely to make a move this year.
You are seeing that being priced back into the market now, interestingly enough, and a week and a half ago you would have said no way. So yeah, the shift is back now that we saw kind of that safe haven trade kick in for a little while, and now you're seeing interest rates rolling back to where they were prior to all this dislocation leading into the interest rate environment just 2 weeks ago. And with that, it has put now a better than 50% chance that the Fed will move in December. So we're going to get some information here from Fed Chairman Janet Yellen on Wednesday, as well as a press conference. And I think that's where you can always get a tendency for the market to react significantly because it's more unscripted in nature.
Let's bring up a chart of the Russell. What do you think about the Russell here? Now the RVX has been low, and some people are seeing some bearish patterns forming. But the more you talk about tax reform,
yep, and that's coming up in the next couple of weeks.
Is it more likely that the Russell will move higher, or is it already baked in? Because this is affecting U.S. smaller companies.
It is.
That are paying a tax rate of about 31% or so. If this tax overhaul comes in, this could really boost the bottom lines of a lot of these small caps.
Yeah, it would be, on the surface you would think it was a beneficial thing for the small cap sector for sure, because most of them are based here in the United States. And that's and also you also have an economic tone here going into the second half of the year that could improve as well. You are seeing though, when you look at the charts though, Angie, the small caps are still struggling relative to the large caps to this point, and there's some other factors involved there, the weaker dollar being one of them as well. So yeah, but definitely when you look at the pattern coming off the lows though, it's pretty impressive. It's been able to push back above its 250-day moving average. So even though it's below its high from July, the Russell has shown some tremendous strength here in the last couple of weeks.
Well, thanks so much for your Trader Talk today.
Yeah, thanks for having me.